To break down the overnight moves on this Friday and what's shaping market sentiment from the week, I'm joined by Scott Phillips from the Motley Fool. Scott, nice to see you. Thank you for joining us. We have U.S. markets on a holiday. While we still have a lot of unknowns coming out of the Middle East, I mean, yes, we do have this ceasefire. Apparently, we've got signatures on some sort of a peace deal, but many of the finer details not yet worked out.
No, and yet the market's assuming most of this is a done deal, right? And I've said to you before, Nadine, I love being an optimist in a room full of pessimists, right? That's my happy place because I get to think long term and think, hey, if everyone's worried about the short term, here's an opportunity. When I'm the optimist in a room full of other optimists or uber optimists or just simply not sure what's going on, I feel a little less comfortable. The oil price back down to $77, $79, depending on which one we're talking about, a barrel. It was 67 pre-war, and that was a 15-month low. So the current price, yes, has a premium on what it was before the war. It's not miles off a longer run average over the previous 12 or 15 months. So it kind of is a bit of everything good is priced in. And again, I'm not a doom monger, I'm not a pessimist, I'm not being contrarian for the sake of it, but I do kind of think, well, the risk then is on the downside, right? If this does blow up, if this does start off again, then there is only downside from here. So I'm a little bit uncomfortable being too happy and being too optimistic and assuming everything is going to be okay. It will be long term, of course it will, but in the meantime, there is some risk. That being said, this has held for the best part of the week. So the longer it goes, the longer it's likely to go, I suppose, and that's good news. We hear ships are now moving again through the Strait of Hormuz. And then broadly economically, it's also really good news because if it does hold, we know the world couldn't have run on 80% of the pre-war oil, right? Just can't. It physically can't. Prices go up because there's rationing. It makes perfect sense. Not absolute rationing, just price rationing. But then what happens, of course, is the things that don't get done are things that aren't profitable, and the economy couldn't have grown over any length of time in that scenario. So it is very, very good news as long as it holds. Interesting too, we're seeing you mentioned the US markets. Now, obviously, it's all about tech. It has been all week. It will probably be for a while. But we're really seeing a bifurcation between their market and ours a lot of the time now. When their tech is on a run, we don't get that uplift. So we are getting a really different scenario. We know that the US sneezes, Australia catches a cold. We know global capital is global. We know all those things. But it does seem like the sectors specifically are making a difference, and that is changing the way we're relating to the US market.
Yeah, absolutely. Just on the tech point, we saw tech, as you mentioned, win the week on Wall Street, but yesterday our tech big names were smashed. So a really interesting dynamic. However, week to date still up by 1.2%. So what are the drivers of this market at an index level as you see it right now, Scott?
Look, it's all about that optimism. It's the bounce back. I haven't done the numbers last couple of days, Nadine, but I'm pretty sure as of Wednesday, I think that's right, the market was like 4.2% over the previous 5 trading days. It's been a really, really good couple of weeks for the index more broadly, but again, company by company, very different. So I think we've really just got that recovery from pessimism to optimism. Again, as I said before, I'm always a little bit concerned that maybe we're too optimistic or at least not leaving enough room for the downside stuff. There is a bit of a bounce back, I think. By the way, resources have been all over the joint all week, and different resources, right? Not even just the resources sector as a whole. We've seen gold up, lithium down, uranium down, energy up. It has literally been all over the place. So it's really hard to draw a single theme through the week, I have to say. But it does seem broadly that it is just a question of optimism replacing pessimism among investors, and almost certainly because of, hopefully, the end to the war in Iran.
Now, let's get a little bit company specific because BHP is such a star because of its copper aspirations and what it's already achieved. Potash is one of those future commodities that BHP has invested heavily in at the Jansen project in Saskatchewan in Canada, but we've got some cost overruns there. Is this a harbinger of perhaps something bigger, worse?
It is fascinating, mate, because you're right. BHP hit a record high, I think it was Wednesday our time. It has been a really, really good run for BHP on the back of, as you say, copper, a bit of iron ore as well, but copper very much the darling. Potash, another $3.3 billion impairment on that project, taking the total $6.7 billion. This is a remarkable story. And it is a story of resources investment, right? Sometimes you get it right, sometimes you don't. I'm not saying BHP hasn't got this right necessarily. I'm not even saying they won't make money out of it. But when you've got to spend an extra $3.3 billion, I know it's a large number game. We know that, right? This is a massive global miner. They are only investing in mega projects because they're the ones that make a difference. But when they go wrong, they do go spectacularly wrong. And so, look, you're not going to count them out. I will say I reckon BHP, I'm not going to say they're lucky, that's not fair, but potash, remember potash a few years ago before the copper boom, potash was where it was all going to be, right? It was the future commodity, as you pointed out. I mean, they've always said they want to be future focused, but potash was kind of the big bet. And maybe they've been fortunate that copper has turned up at the right time when potash is actually facing trouble. That being said, if they can make copper work now and then potash work, they have got a second leg of growth ahead of them. So, as I said, I'm not writing them off, but I do look at that and think there's a lot built into that BHP share price. I don't know how much is sustainable unless they really can juice earnings. There's a lot of expectation. You mentioned kind of tech, and we talked about the optimism. I think there's a lot of it's not exactly story stock stuff, but there is a bit of a thematic that's driving the market right now, whether that's tech, AI, copper and electrification. There's a lot of that around. And again, it just makes me a little bit uncomfortable because, yes, they are going to be happen. They're going to happen. Of course they're going to happen. But will they happen quickly enough and to the size required to justify some of these prices? The higher the share prices go, I think the riskier that gets.
Okay. Is it a big deal that some Westpac execs are having to justify themselves to APRA in regards to how they've treated small business?
That's a good question, mate. I suspect not, but with an asterisk. And where I think this is going, APRA's concerned about how they've treated small business, but also the quality of the small business loans. And that's the one where you start to think, the subprime crisis, mate, you and I were covering it at the time, but it was, it was not that long ago that we've forgotten, but it feels like a bit of time ago. APRA is doing the right thing, just making sure things like private credit, business lending, home lending are being done appropriately and prudently. And that's kind of, when they're sniffing around, there's just a reminder, just to be a little bit careful about how these things are being done for Westpac itself, for investors as well. I suspect it's not a big deal. The benefit of this happening, of course, is they're asking about it, they're on top of it. And that's what you want, right? What happened with the subprime was all of a sudden we went, oh, no one was checking that stuff. So the lesson's hopefully been learned by the regulators, certainly here at home. And if they get that right, they keep asking the questions, they keep on top of this stuff, we will be okay. They have been a little bit more vocal though, across the board, APRA, whether it's small business lending, whether it's superannuation valuations, private credit valuations, private equity valuations. There is a sense they are, I won't say they're worried because that's not fair, they haven't said as much, but they are certainly asking more questions more publicly than have been in the past. And that does suggest they are at least a little bit mindful of what might be going on and trying their best to make sure there are no systemic risks in the system. If they can avoid those risks, that's a really, really good thing. So is it a big deal they're asking? Hopefully not, because they're ahead of it. But it does suggest they are at least mindful of where the credit risks might be in the banking system.
Now, I think one of the most interesting corporate stories of the week was this bid made by Fraser's, already a significant shareholder in Accent for the whole group, and they were pretty scathing about how the company's being run. What do you think of it?
You're right, mate. It's a fascinating story. I'm glad you raised it. So it's a zero premium takeover. They basically said, we'll buy the rest of the business, but at last Friday's price. This came out on Monday morning. And they did it at the time, basically. And by the way, it's not a takeover offer, but it's on market. So there's not a case of we'll only take the business over if we get to 75 or 90% acceptance, depending on what scheme you normally use. And these days it's normally 75% with a scheme of arrangement. But either way, it's not that. It was literally just, we're happy to take over the whole business. We'll buy all the shares. We're offered at 65 cents. And I think that was just a fascinating thing. As you say, then coming with the press release, basically trying to talk down Accent. The inference I think we're invited to make is they think this business is rubbish. They think it's worth less than this. And if we don't take the money, what they're offering, then things could get worse. I'm not sure they're wrong, by the way. Things could get worse. I don't think they necessarily will. And the share price is down a lot. By the way, interesting enough, the timing was fascinating because they'd last talked about this company in, I think it was February. It was. They last bought shares. And the corporations law don't allow you to make a takeover offer at less than a previous price unless it's more than 4 months ago. So they literally bought some shares back in February. They waited almost exactly 4 months and said, right, now we're on. We can offer a lower price because the price had fallen since, and we're going to take the whole business over. I'm fascinated by this. It feels to me like a way to pressure the board. If they wanted the whole business, they would make a formal takeover, have an acceptance level, put a premium on it, and try and make this thing go. It feels more to me like this is a case of applying some pressure. They obviously think it's cheap because they're happy to buy the shares. They don't think it's so cheap they're prepared to pay more for it, or at least they don't think they have to. But how this plays out is interesting. The other thing is also it allows them to avoid the creep provisions. So again, this is corporations law on a Friday morning. How fun is this? But you can't buy more than 3% of a company's shares every 6 months if you're over 20% without launching a full takeover bid. So if they want to creep up the register by more than 3%, they had to make a bid of some sort. In this case, if they simply say, we'll do as many as you want at 65 cents, they kind of have the best of all worlds. They get more shares if they think it's cheap. They get to pressure the board. If they get offered enough, they get control, maybe another board seat. So Fraser's got holding all the cards. The Accent shareholders have to hope the business is worth more than the current price or sell those shares on market. The shares did jump as a result. There is some sense that now maybe the company's in play, but Fraser's kind of has their foot in it. So that might have been optimistic as well.
Well, fascinating to watch. So just quickly to wrap it up, it wouldn't be out of the realm of possibility that we continue to see an underperformance for the ASX today, not only compared to US markets, but I think in mind that we've got this long weekend in the US, and even if we see Asian markets, as we did yesterday, hitting these record highs.
Yeah, that's right. And so it really comes down to the composition of our market. And we are talking about whole markets, and we should, because that's the All Ords, the ASX 200, or the CBA. These are the indices we look at. But remember that below the surface, our composition is increasingly different from the US. We've always been different from Asia. And so, we are seeing really, you always got to compile the sectors back together, right? See which sectors are doing what and how. I wouldn't be surprised if our tech sector did well today. I wouldn't be surprised either if our resource sector does badly. And again, think about the composition. In the US, it's all tech. Here, it's all resources and banks. So even if our sectors move in line with their sectors, our total index won't necessarily move the same way. I know it's going to happen today. We know the futures are down 0.5%. So that's the most likely outcome, right? The futures have been wrong before. But yes, pick your stocks carefully, understand the sectors, don't believe anymore if we ever did. And I think there's an assumption the market will track the US. It is going to be very different because while we were sleeping, literally metaphorically, the US is changing more quickly than we are. And that composition is going to have a far bigger impact on markets than it has in the past.